Well, good afternoon, everyone. I'm Dave Weisberger, CEO of CoinRoutes. It is Friday, March 31st, one quarter in the books to 2023. And I wish I could say that the stories are different, but the reality is the stories are more or less the same. First, let's take a look at the markets, which have been remarkably resilient in the face of twin uncertainties coming out of the banking crisis, the Federal Reserve, and the inflation situation. So, what do we have? Bitcoin over the last week up about 2%, NASDAQ up around 2%, Ether up around 3.5%, had some significant outperformance earlier in the week. And that sounds more or less boring, except what actually happened is during this week, when one of the news items came out, Binance being sued by the CFTC, Bitcoin dropped 10% and it has since recovered. We're getting used to that story. Basically, the market is fairly simple to analyze right now. The hash rate in Bitcoin's network is literally at an all-time high. People are talking about a narrative potentially sparked by Belay's $1 million in 90 days kind of crazy comment. But what's really happening here is it's all about the word confidence. Now, confidence is very important because when the public acts, there's all this research to talk about the madness of crowds and how bubbles happen because people get FOMO and they all want to go do everything together. Well, the same thing happens on the downside. And what we have in the United States is a situation that more or less can be summed up this way. For the last several months, there was a situation in the banking sector where losses were piling up inside their balance sheets and they were telling nobody about it, because the rule, as I said last week, is that banks are allowed to hold assets that are going to mature at $100 at $100 on their books, even if now at mark to market, if they had to sell it, it would be worth $60. Unfortunately, if they have to sell it, bad things happen. So we all know that when Senator Warren attacked Silvergate Bank, it triggered a panic there, which spread to Silicon Valley Bank, which very unfortunately for them, they had to announce a $1.8 billion realized loss, which of course became dramatically larger than that when they had to sell assets. So what happened? The banking sector got under stress. The Federal Reserve came out and pulled out the howitzer. And while they've only had to essentially remonetize or reverse somewhere around 50% plus of the quantitative tightening that they've done in this cycle, they left out a bazooka of liquidity of over $4 trillion to back up the banking system. Now, why are they doing it? Well, they're doing it because they're worried about confidence. The regional banking system in the United States right now is underwater, at least the entire banking system is underwater at least by $600 billion. They are still on average paying dramatically lower interest rates than people can get from money market funds or treasuries. So therefore, there's a risk that people say, you know what, let me pull my money out. They're trying to restore confidence in the system to stop it. So instead, what's happening is it's leaking around the edges. And Bitcoin, which is an alternative to this system, one where you don't have to take counterparty risk, is gathering steam. And we're seeing that in the network growing, the network getting stronger, more and more adoption. In fact, the market action we're seeing looks a lot like this. It looks like there are some institutional buyers, large capital allocators, who want to acquire more Bitcoin, but they're not willing to push the price up. So every time there's a dip, every time there's forced selling, it's met by buying. Now, is it met by buying as a wall? No, it's scaled back buying. But people see that and the market reacts accordingly. In fact, there was a story out talking about both the federal government selling Bitcoins that they have taken in one way or another, and also about the Mt. Gox Bitcoin. And I made the point this week, and I want to make this clear why I said this. I said, if in fact the entire Mt. Gox Bitcoin cash, about 1% of outstanding supply, had to get sold by the federal government, it would probably be the single most bullish thing that could happen and might trigger the next massive bull run. Now, why did I say that? Because there are people who want to buy Bitcoin that do not believe it's investable. They think if they want to try to put $1 billion to work, they can't. They'll push the price up, they'll make it double. So they're unwilling to allocate that much. Give them the opportunity to buy some at an auction, however, and we'll all of a sudden find out what the real demand is. And then without that overhang on the price, now without worrying about the FUD that comes from, oh my God, they're going to sell and knock the price down, the price will start to rally. And I think that that's a fairly likely scenario, given the fact that when I talk about the news events in about a second, you'll see it's overwhelmingly negative and it doesn't seem to matter. Let that sink in. So what happened this week? Number one, Binance sued by the CFTC. Many allegations in this suit are very serious. Some are less serious. So it's pretty clear from the lawsuit and from what we all know in the market that over the last 3 years, Binance has significantly tightened up their policies. It's virtually impossible now, as far as I know. I don't know anybody who's gotten a Binance account that's a US citizen. You can't use VPNs. You can't get around it the obvious way. So we know that that's true. And we know that the suit was pointing to a time before that. And that's fairly typical. The CFTC and the SEC will sue people for older things. But as long as they've made strides toward fixing it, the settlement that ultimately happens will be reasonable and will certainly not be crippling. And I think that's what the market's betting on. The one thing in this case that's interesting that we have to bear witness to is whether or not they have proof, because there's allegations, whether there's proof that Binance acted to help favorite partners, i.e., market making firms based out of Chicago, to get around their rules. Now, if that's true, they are going to have some serious issues. I'm not saying they're going to get shut down. I am saying they're going to be forced into a settlement. I am saying there's issues. The wild card here is that the CFTC action is civil. What we don't know is if anything is going to come from the DOJ. And clearly, a large part of the reason for the market falling is people worrying about a criminal action. And that could be very bad in terms of shutting Binance down. And that will definitely impact altcoins much more than it will impact Bitcoin, because Binance is the altcoin capital of the world. But the reality is, it's something that people in the ecosystem are worried about. What else news this week? Well, we had two things that happened from the SEC. We had Mr. Gensler going on Capitol Hill and repeating the same lies that he's been telling, that existing securities rules will work for crypto. Now, I use the word lie, and that sounds very strong. So let's be really clear about this. What I mean by this is simple. Let's start with two very clear cases. Case number one. If you are an issuer of a crypto token and you are not a corporation, you have no financials, you have no board of directors, you have a DAO and governance tokens, there literally is no place on the SEC forms for you to fill out. You cannot fill it out. In fact, there's nothing on the forms to put the most important part, which is the token economics for your token. So the SEC has rules that say we want risk disclosures. Gary and I totally agree with one another. We should have risk disclosures, but there's no way to do it. So stop saying there is. It's absurd. Okay. The second thing is, if you're an exchange, there is no path to registration to trade as securities. There's no way you could trade tokens against multiple currencies on the same platform. There's no way you could support on-demand settlement. There's no way you can support custodians the way they work in crypto and the settlement of all of that. It's just not possible. The rules need to change, but he doesn't want to do it. Meanwhile, at the same time, same day, they came out with an investor advisory. And I put out a pretty inflammatory thread about this. And I'm sorry if some people found that offensive, but the reality is it's very disingenuous. The fact is the SEC is not supposed to be choosing winners and losers. They're supposed to make sure that investors have as much information as they possibly can, and that it's true, and that people who lie will get prosecuted. And I agree with all of that. But in fact, what he said is this is inherently risky and bad. Well, the fact of the matter is, and if they would listen to that advice, this week alone, they would be down. Bitcoin is one of the better performing assets since that came out. But forget the actual performance. The fact is, over the last 5 years, it's been the best performing asset class. Even if you bought Bitcoin at the absolute top at 69,000 and dollar cost average since then, you're profitable today. So why are we claiming that this is more risky than buying meme stocks like AMC, which is totally legal under SEC rules? And yet, despite the idea that it might mother of all short squeezes to $1,000 or to $70, it's trading well below all those levels. And Charlie Gasparino of Fox News and the New York Post will tell you how ridiculous it is. That's legal. So why do we do investor advisories about crypto and not about stocks like that? Because they don't like them. And the third piece of news stories was Elizabeth Warren basically not even pretending anymore. She put in her campaign ad that she's forming an anti-crypto army, which the irony is crypto is used more, a higher percentage by working people than by rich people. It's used by a higher percentage of minority people than by non-minority people. It is something that when I, in my everyday life, talk to people who work either at our company or who come in to do work, or I go in and talk to a shopkeeper on the streets of Florida, quite literally almost every conversation, if I'm wearing my CoinRoute shirt, goes to crypto, and they're all interested. So for her to make the claim that she's trying to help working families by fighting against crypto, it's literally the opposite of the truth. Now, I doubt it will matter. I doubt that an incumbent like her is going to lose in Massachusetts with these sorts of things, but it's incredibly interesting that she has abandoned the progressives in the Bitcoin movement, of which there are many of which I respect and am friends with, despite having somewhat different political views. But we all believe in economic freedom. We all believe in equality of opportunity. And we all believe in an alternative financial system that doesn't have potentially $1 trillion of losses sitting inside as counterparty risk. With Bitcoin, there is no counterparty, and we understand that. Now, that's a lot of ranting. What else happened this week? There's one piece of really interesting news. So Tom Emmers gave a podcast where he basically laid out the opposite of this case. And considering the fact that he's the minority whip or the majority whip in the House, that's a pretty good person to have on our side. We need more people, however. And so I would advise everybody in the crypto community to become more politically active, to talk about the benefits. Yes, there are issues with it. But as I've said many times, regulation is a good idea if it is on principles of better disclosure, principles of fiduciary responsibilities like best execution, principles of protecting client assets, and probably most important of all, principles of maintaining fair and orderly markets. So, one last piece of news that came out. It's worth stating. In the Binance case, it was explicitly stated by the CFTC that Ethereum is a commodity. At the same time, Mr. Gensler is explicitly stating that Ethereum is a security. So what we have is a good old-fashioned bureaucratic food fight. Now, why do I care about this? Because this means that we're sitting with a regime that is essentially incapable, without legislative action, of getting clarity for the industry. At the same time, London, Europe, Asia, Dubai are all creating regimes that will regulate this market. What is at stake here? What is at stake is the future of the financial services industry globally. We once made a mistake, and I've talked about this before, allowing London to become the largest financial center in the world surrounding the Eurodollar market. In that particular case, it wasn't so horrible because dollars were at the core. What happens if we allow other countries to become the center of the digital asset markets? Digital asset market structure takes over most financial markets, and the US is a backwater. What also happens if other currencies dominant form, not the dollar? Well, I'll leave that to your imagination, but it isn't good. My best guess is potentially millions of jobs migrating from American shores, and that's something we should care about. But we'll talk more about that next week. For now, have a great weekend and stay safe out there.